and welcome to a TradingWolf Smart Money Concept Indicator Update. So today I'm just going to be briefly going over the multi-time frame fair value gap, which is a brand new update on the Smart Money Concept script. Pretty simple concept is that we have the normal fair value gap, but we have now added the option so you can be seeing one on a different time frame, hence the multi-time frame signal here. So I am currently on the 1 hour on Bitcoin, and I've just set this to the 4 hour. You can very easily change this time frame, whichever one is looking at, and obviously you can disable it and enable it here. Just to make it nice and clear, I've disabled the actual traditional fair value gaps, so we're only seeing the multi-time frame ones. And as always, we don't like to cherry pick particular signals. We just look at the latest data on Bitcoin, for example, and try to give you examples based off of that. So I've gone over fair value gaps before, but I just want to go over the multi-time frame fair value gap and how it's slightly different and how you can use it to better your trading. So once again, for fair value gaps, we want to be looking for liquidity grabs. So I'm just looking here at Bitcoin, once again, just looking at the latest data because we don't just cherry pick signals trying to make it look good. We're actually taking real life examples which you can potentially trade from. So just going back to this one here, I'm actually just going to hop into the 4 hour time frame because I'm pretty sure this gives a cleaner idea. Yeah, okay, so if you're thinking about where traders are going to be having their stop losses, it's probably going to be underneath this swing low, but you can see this is going to be where traders are actually building up their long positions. They'd see a price come back down to this region and nice interaction here, potentially taking a long off here. Price moves away, comes back down, tests it again. Then what we have is the break. Now this is what you'd call a liquidity grab because we have price breakdown below where the support is, and it actually breaks the swing low here as well. So any stop losses which are just on this low would have been stopped out. So we can see here after the price has done this liquidity grab, it actually comes back up and reclaims this support area. As it does this, we also have a fair value gap formed on the multi-time frame, once again, which is currently on the 4 hour time frame. So these levels are going to be slightly better respected than the time frame you're looking on because the higher you go, the more respect there is, more liquidity builds up, more traders are using it. So yeah, for this example here, this is very clean fair value gap. You could also be considering this one. We always recommend trying to look for the nearest fair value gap to the actual pivot low, the actual liquidity grab. So this is a nice clean fair value gap formed right next to the liquidity grab after we reclaim the support area. So we do also have another one up here, which we do have a tap into, but these are the ones which we don't particularly like to trade unless you know you're trading with the trend, which in this example, we're currently not because we've just set in a new low. So we'd only be looking at this one down here. And as you can see, price comes back down and hits it perfectly before moving up. So this is a prime example of how you'd use a fair value gap, especially a multi-time frame one, which is very well respected, as you can see. You can also trade these ones, which are the smaller ones, but you only want to trade them with the actual trend if you are. So for example here, we don't have any liquidity grabs or anything like that. So you're just looking for simple taps in to follow the trend. As we can see, this is actually a bullish one here because it's underneath the price. So you wouldn't trade that because we think we're in a downtrending market. Comes down, retest into this one. That would have been a nice short percentage move. Probably be taking profit around this area rather than hoping for more downside. So 2% swing there. Same idea here. Price comes down, fair value gaps formed. Comes back up, tests the middle perfectly here for another 2% move down. But yeah, once again, you're not looking for huge moves off of these ones with the trending ones because there's no liquidity grab and that's not how fair value gaps are traditionally traded. So also I'll just try see if I can find one on a lower time frame. So I'm going to go into the 1 minute and in the settings, let's use a 3 minute time frame. See if we've got any examples I can use on the lower time frame. Okay, so just trying to look for those liquidity grabs again. So here we have the low. Think where would people put their stop losses? Underneath this swing low if they're getting in. If they bought into here, the stop loss is going to be below. Then we have a liquidity grab where this would have stopped out anyone. It did actually go into another multi-time frame FVG there before reversing, but I'm not going to look at that example for now. We're just looking at here. So what do we do after we have the liquidity grab? We look for the nearest fair value gap formed next to it, which is right here. This is a great example as well because we have a change of market structure as well. So we're going from lower highs and lower lows to here we're having higher high and higher lows as well. So this is a great extra confluence and confirmation for this idea. So this would have been a beautiful trade it just into the multi-time frame fair value gap there, which is traded nicely to the upside. And once again, not trying to cherry pick, so just see if there's another example. Or actually, what I might suggest is this could be considered a potential setup coming up here. So I'm going to share this in the Discord group and you guys can see how it plays out. But what I'm looking at now is we have touch to the high here. Actually, it starts from this wick back here. So this is clear resistance point. Never touch, never touch. So shorts might be building up here. And what do we have? We have price go through and tap any of those shorts out. Okay, so we've had the build up of liquidity above here. We've just now had a spike above. And there weren't any fair value gaps formed in this section there. So ideally what we want to see now is price from here come back down, and within that it's going to form a fair value gap in this sort of area. Look for a retest in there before trading it back to the downside. Realistically, it doesn't need to come that low. It can just come as low as that did here, but we'd want the fair value gap just to be formed somewhere in this area. So we could take the short, stop above the swing high, and be trading it into the last area of confluence, which will probably be this block here with another multi-time frame fair value gap. So I'm going to actually post this idea to the Discord group and people can see if this plays out or not. I'm actually going to leave it here though for this video. I just wanted to make it a quick overview of the multi-time frame fair value gaps and just sort of covering how we trade them as well. Once again, I will be posting this example in the Discord group so we can see how it plays out, see if our prediction comes right. If you have any tool suggestions or anything you'd like to see added to the TradingWolf scripts, then please let us know. You can contact us in our Discord group and we'll be happy to respond to any ideas there. Thank you very much for watching.
Bust this.